Every candlestick you've ever looked at is hiding something. It tells you where price opened and closed, but not the fight that happened inside it. Who was actually buying? Who was selling? And at what price did one side give up? A footprint chart answers all three. In the next few minutes, I'll show you how to read one from a single price sell to a live trade decision. No hype, no signals to follow blindly, just what the order flow is actually telling you. Quick thing before we dive in, if this helps you, drop a like and hit subscribe. It genuinely helps. And as a thank you, I'm giving away 5 of our order flow indicators, completely free. Just subscribe and comment the word flow, and I'll get them to you. Start with one candle. On a normal chart, it's a single bar. On a footprint, that same candle is split into rows, one for every price it traded at. And each row has 2 numbers. The number on the left is volume that traded at the bid, sellers hitting the offer, hitting sell. The number on the right is volume that traded at the ask, buyers lifting the offer, hitting buy. So reading a footprint is simple in principle. Go row by row, and at each price, ask one question. Which side was the aggressor? Left number bigger, sellers were pushing. Right number bigger, buyers were pushing. That's the whole foundation. Everything else builds on those 2 columns. One setup note before we read. The footprint only helps if each candle holds enough trades to show structure. Time-based bars tend to smear that detail, especially on a fast contract. Most order flow traders use volume bars or tick bars instead, sized so each candle is busy enough to be interesting, but not a wall of numbers. There's no magic setting. Cycle through a few sizes in simulation and keep the one where imbalances and absorption are obvious at a glance. If you have to squint, the bar is too small. Now the first real edge, delta. Delta is just ask volume minus bid volume, the net. Positive means buyers were the aggressors on balance. Negative means sellers were. Here's where it gets useful. A candle can close green, price ticked up, while printing negative delta. Price went up, but more volume actually hit the bid. That's a mismatch between what price did and the effort behind it. And those mismatches are some of the most honest tells the market gives you. Track the running total with cumulative delta, the line along the bottom. When price makes a new high, but cumulative delta doesn't follow, that high was hollow. You didn't need a guru to call it. The order flow said it out loud. Next, imbalances. An imbalance is when one side massively outtraded the other on a diagonal comparison. Ask volume at one price dwarfing the bid volume at the price just below it. 1 or 2 is noise. But when they stack, several in a row, that's an aggressor leaning hard and not letting up. Stacked imbalances into a move tell you the push is real. And the moment they disappear near an extreme, that's your first hint the aggression is drying up. Good tools flag these automatically, so you're not doing diagonal math by eye in a fast tape. This is the one that changes how you trade. Absorption. Picture price pushing up into a level, a prior high, the value area edge, whatever you watch. The footprint shows heavy buying, big ask numbers, aggressive buyers hitting it again and again. But price doesn't move, it just sits there. Someone on the other side is absorbing all of it, a large seller quietly soaking up every market buy without flinching. When aggressive buyers can't move price at a level, they're exhausting themselves against a wall, and the reversal that follows tends to be sharp. Same thing in reverse at a low. That's why your breakout kept failing. You were buying into absorption and never saw it. Let's put it together on one read. Price rallies into a level you'd already marked. First, the imbalances. Were buyers stacking into it, or did the aggression fade as you approached? Then delta. Is cumulative delta making a new high with price or lagging and quietly diverging? Then the level itself. Are big ask numbers hitting it and getting absorbed, price refusing to break? When those 3 line up, fading aggression, diverging delta, and absorption at a level you respect, you have a real evidence-based read. Not a prediction, a read. You still decide, you still manage risk, but now you're deciding with the actual order flow in front of you, instead of guessing from a candle. That's how to read a footprint chart. Bid and ask at every price, delta and cumulative delta for effort, imbalances for aggression, and absorption at your levels for the turn. It takes reps, so put it on a sim first and just watch it for a few sessions before you trade it. If you want a head start, I put together a free order flow cheat sheet. Link is on screen. Learn the reads, then decide if a tool that flags them live is worth it. Either way, you'll never look at a plain candle the same again.